Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have JJ Kinahan. He's the chief market strategist over at TD Ameritrade for the July retail trading trends, the investor movement index, and it looks like investors have taken a cue from the markets moving into fixed income and a little bit out of equities, but the good thing is they're staying invested.
They are staying invested, but it's really interesting, Jill. This is 2 months in a row now where our clients have been net sellers of equities, net buyers of fixed income. So maybe they saw something that the rest of us didn't, so to speak. And as the markets continued to climb and hit new all-time highs, et cetera, I think it made our clients just a little bit nervous that perhaps it was getting a little bit overdone considering the swirl that's obviously come out this morning of things that are big macroeconomic factors for the market.
Feels very reminiscent of August 2015, and we saw what happened with the Dow performance there as well. But it's interesting where they took up more exposure. It was a wide range. You have AbbVie, Disney, a little bit of a canopy growth in there, and another cannabis company. It's a very wide range of sectors.
It is, you know, MasterCard in there also. So I think if you look at it, you know, the cannabis stocks continues to be of great interest to our clients, led primarily by our millennial clients when it comes to that. But, you know, the more traditional, you have the Disneys, MasterCard. Again, the strength of the consumer is something that has been loud and clear in earnings calls so far. And I think that our clients have definitely taken up that call. I think the sell side is actually maybe more interesting.
Yep, well, Amazon, Apple, Intel, Facebook, it makes sense. I mean, look at where these stocks are. If you've gotten some nice exposure, it makes some sense to take it off the table.
It really does show an amazing how quickly the FANG stocks have fallen out of favor. Or, you know, for so long it was you have to own FANG, you have to own FANG. And you see Apple leading the way on the sell side. Again, number one holding at our firm. But over the last few months, people have certainly, as the stock has gotten above 200, people have turned to be sellers of Apple as it's continued to go higher. So when, you know, it's not like they're necessarily going short, but taking profits on a stock that many have owned for a long period of time. And as you said, you know, Facebook and Amazon, also stocks that people maybe aren't as comfortable owning up here.
Yeah, and we saw the same thing with millennial buys and sells. For the most part, same mix in there, sold the same tickers. Uber, though, they picked up.
Uber, they did pick up. You know, to me, it's very interesting when I watch Uber, considering that, you know, they just had some of the advertising COO news last week. But one of the things that I think about Uber is it goes back to the same way their parents thought about things. What are products you use that you think long-term can work out? So when I look at, you know, our millennial population buying Uber, that's the primary target for Uber. And it's a stock that I think people believe in a long-term story because they use the product so heavily.
Well, I've contributed to their bottom line. That's
probably
sure.
This morning, actually.
Well, okay, so let's talk and get your market outlook here. While the volatility might be good for your short-term traders, that's a great thing. There hasn't been much volatility in the market, so it's a good opportunity for them. Longer term, if you want to get back into widely held names like an Apple, this could be a good opportunity once the smoke settles.
It absolutely could be. You know, you may see us have a little bit, as you and I speak right now, we're trading just below 28.70 on the S&P 500. You may see us at 28.50, take a little bit of a pause. 2800 is a bigger line in the sand overall. And, you know, last time I was on, you and I talked about the fact that the market's going to probably continue to be range bound, an upper bound and a downside bound range to it, and those bands will stay in between it. I think those bands in the short term are 2,800 to 3,000. Longer term might be a 2,650 to 3,000. But at the end of the day, until this tariff news is settled, until we see pen hit paper, I think you're going to continue to see us be held back by the fact that people aren't as confident maybe when we get near the upside of the range, just in case they don't get settled, as we're seeing now. And on the downside of the range, you're not going to see, it's going to be the FOMO complex. I don't think you'll see people selling too heavily because in case they do get settled, they don't want to miss out on a rally. So I really believe this is artificially keeping us in this range.
I also think there's a concern over earnings as well. The quality of the season was okay. Saw some top line beats, not a lot on the bottom, and I think the real issue is with guidance. Nobody knows how to guide because the global trade situation is very murky.
Well, what concerns me actually about earnings may not even be the shorter term, but the longer term, because the one thing I don't hear in earnings calls is we're spending money on infrastructure.
Right.
I can't blame the CEOs because you don't want to go out and spend money when you don't know what the outcome is going to be. You're not going to get as penalized for buying back stock, et cetera. You are going to get penalized if you start some big project that you didn't end up needing. So that tends to actually hurt you 3 years down the line 2 to 3 years down the line. So I think that that's something we need to keep our eye on in earnings. And obviously with the news this morning, if the devaluing of the Chinese currency, the tariff news that came out last week, that could absolutely affect earnings, especially for multinational companies, as the strength of the dollar makes things harder for them. And of course, the interest rates continue to go lower, 10-year rate down to 1.76 as we speak, and with that, the financial stocks, second largest sector in the S&P 500, are going to continue to be weakened. They just can't fight that. It's too great a gale force in their wind to continue to fight.
So for newer investors, why is it such a big deal when we see a headline that the yuan has been devalued?
Absolutely, Jill. So what it does is it'll, the president talked about this quite a bit in both his campaign and then after he was elected, because he feels it gives them an unfair advantage. They don't have their currency float against other currencies, so to speak, in the same way the rest of the countries do in the Western Hemisphere. And I think one thing people have to keep in mind is China is still a communist country, and sometimes I think we forget that. So they can do some other things without fear of not being elected again, et cetera. And so with that, it makes, if we continue to do this, they'll just make it so it's cheaper and cheaper for, it keeps their goods competitive for the rest of the world, because our dollar is stronger versus their thing, so the relative price won't necessarily change.
So this could potentially hurt international conglomerates, industrial companies, consumer companies that have manufacturing in China or around the world, because it's going to be more expensive for them to create their goods.
Yeah, absolutely, because the companies that try and ship overseas won't be able to.
All right. Well, thank you so much for joining us at MarketSite.
Always a pleasure, Jill.
And thank you for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.